If we are unable to confirm a rising certainty that the economy and prices will stay in line with forecasts, then there's no change to our stance and we'll continue to adjust the degree of easing.
So, 2 marathon sessions on the docket today from Governor Ueda. Let's speak to Bloomberg's Paul Jackson, who's been tuning in for us. Paul, how successful do you think Ueda has been this morning and this year in communicating the BOJ's position?
Well, certainly today, I think he's turned a potential tightrope scenario into something more like a walk in the park. It's been relatively successful. He's managed to keep rate hikes on the table. He's also reassured markets that he will look at market moves very carefully with extreme care. And at the same time, he's also pushed back a little bit against the criticism that the BOJ helped spark this huge market rout. He's played down the rate hikes significance in terms of sparking the rout. That's the rate hike on July the 31st. At the same time, he said the decision was appropriate. So I think a lot of the check boxes that Mr. Ueda and his team might have had early this morning, I think he's managed to get them all checked off pretty well. So I think that leaves a rate hike in the coming months still on the table.
So when do you see that hike coming? And do you think when it comes, we'll see the same market ructions?
Right. Well, I think Deputy Governor Uchida's comments early this month, in which he said the bank would keep the level of easing for the time being, including the rate, points to the fact there's no chance of a rate hike in September. Of course, you should never say never, but I think it largely rules out something this quarter. So kind of on the margins is something right at the end of the quarter would be, in terms of a 3-month period, would be the October meeting. Now, that also looks a bit early. It's also just before the US election, so there could be market turbulence then, or uncertainty. So would you want to move then? I think really we're looking at December here. Also gives time for things to settle down after the US election. And assuming markets are in a more stable place then I think that would be the time to go. And 2/3 of economists that we surveyed earlier this month after the market rout think that the timing will happen by December.